Ken Barr for Canada's Mortgage Minute. Rating agency Fitch is predicting that the Canadian housing market will not climb much longer. In fact, they figure we're in for a soft landing, which will result in either a flattening or a slight decrease over the next 5 years. They also said in this report that they feel that the market is overvalued by about 26% in some regions, 21% nationally, and could fall by no more than 10%, however, over the next 5 years. When this does happen, their estimation is that the Canadian economy will be somewhat exposed, and where it will be exposed is with home buyers who have stretched themselves financially to get into the market, and they would be in for a bit of a shock as interest rates start to climb. Obviously, we haven't seen much in the way of interest rate, and there's mixed predictions on that front. But the downturn in the housing market obviously would have an impact on jobs because, let's face it, the construction industry has been booming as a result. So their warnings are, with a high level of employment and individual net worth tied to the value of housing stock in Canada, a downturn would certainly have serious consequences for the economy. And basically they said that the housing prices have surged more than 130% since 2001, outpacing income growth by more than 80%. However, they felt in the same report that there are several factors that will lessen the impact on the Canadian economy, and they are the low level of unemployment and the proactive government policy. They were pointing to the fact that Minister Flaherty has been proactive in this front, and he has certainly tried to stay ahead of the curve and work towards a soft landing, which could have, in their estimation, had happened had there not been government intervention and policies specifically designed towards this. And therefore, these policies will result in modest declines in their estimation, being more the norm than something more dramatic happening. Now, they're not alone in this. The Conference Board of Canada also predicted that the housing market will be shielded from a hard landing. They figured that a crash would require a significant negative surprise, like a major interest rate hike or unemployment collapse. And in the cards, they don't see such an event happening in the Canadian economy. And I also reported to you last week that the Canadian Real Estate Association said in their October numbers they were down since the first time since February. Transactions fell 3.2% in October from September on a seasonally adjusted basis. But the number was also an 8.2% hike compared to with October 2012. As we know, in October 2012, with some more of the changes, the market had slowed. The housing price index rose 3.52% from October 2012, with the national home prices in October coming in around $391,820, up 8.5% from a year ago. Now, there were some major cities that drove this. They were Toronto, Vancouver, and Calgary, which, if you take them out of the equation, would result in the average price only going up 4.9%. The big losers, if you want to call them that, the cities that were the slowest were Quebec City, Saguenay, Quebec, and Halifax. They all registered double-digit declines. So, in summary, what is Fitch saying? Fitch is saying that they're expecting what a lot of people have been predicting for some time, a bit of a demise in the Canadian housing market. They're figuring that this is going to be a soft landing, nothing dramatic. They figure that the proactivity of the government is going to result in that. The fact that we have strong employment, a lot of fundamentals are still in play. And again, the big numbers out of their opinion is that the market is overvalued by about 26% in some regions and 21% nationally. Again, interesting predictions. We will see where they all play out. It's always fun in this business where we get to report on things of this sort of nature and what people are predicting, and I look forward to seeing what the outcomes of all of these are. Whatever you need housing wise as far as mortgages go, don't hesitate, give us a shout at the Auxilium team. Auxilium, as you know, means to care, aid, assist, and support. In Latin, that's a literal translation, and that's what we do here day in and day out at the Auxilium team, and we look forward to assisting you.